Hey, everybody, welcome back to another edition of Market Talks with DrStoxx. This is Dr. Tom Carr, aka DrStoxx of DrStoxx.com, DrStoxx.com. We've been in business every market day since October of 2002, if you can believe it. Now in our 23rd year. And if you want to join me and a great group of traders that hang out together throughout the market day, each and every market day, just about. You go over to the DrStoxx.com site, click on the subscribe menu, scroll down to the live trading room. That's where we're coming from today. I think we've been in business about 5.5 years now. And if you want to add on the new live options room, you can do that at a 40% discount. Okay, so I want to do a couple of things with you today. We're first going to start over at the TradingView charts, and we're going to look at some major indexes. So we've been in this 4-week pullback. Let's take a look at the S&P 500, right? Topped out here, big slam on a Trump tweet, right back up to new all-time highs, and then it was a 1, 2, 3 wave down over a period of about 4 weeks as the market priced in some concern over AI, thinking that might be a bubble. The big companies were spending too much, getting over leveraged on debt. There wouldn't be enough profit to make up for that, having to sell bonds, having to sell shares, and the market just got a little worried. And of course, those are good things to worry about. No real concern really about the recession coming or the overall economy. The overall economy is still doing pretty good. Unemployment rate still pretty low. Jobless claims still well below recessionary levels. All the growth metrics, which we don't really have yet for October, but for September, have been good. And so otherwise, other than that, the market kind of said, hey, we overdid the AI fear. Let's buy stuff back up. And they did that last week. In fact, I just mentioned in the live room that last 4 days of trading on the holiday shortened Thanksgiving week last week saw the 4 biggest back-to-back trading days in the S&P 500. And I don't know if that's on a point basis or on a percentage basis, but it was a really good week. So here's the slam down. It was kind of a painful slam into a near-term bottom, capitulation bottom, we can say on a near-term basis, because that big red stick right there, huge selling volume, was the biggest stick in months. When you see that at the bottom of a pullback, that's usually a time to get long again. Not always, but you can use the VIX and we can use other sentiment indicators and the fear and greed index. All those things were hitting extreme levels. When you see all those things coalesce together, it's a pretty good chance that you're at or near a buyable bottom, and that's exactly where we were, and we did buy that. We bought a little bit on the way down. We bought a little bit more when it started to bounce back, and then we enjoyed a nice ride last week and got us, at least speaking for the live trading room, back up to new all-time highs. We still have a little bit of a drawdown in the options room, but not on an open trade basis, only on a closed trade basis. And my own account from Friday is back up to new all-time highs for the year. Okay, all good. Now, where do we go from here? Let's take a quick look at the NASDAQ. It's pretty much the same thing. 4-week, 3-wave down, overdone, bounce back up very nicely. But you can see we're a little bit further from all-time highs in the NASDAQ than we are in the S&P 500. It's a much closer shot to get to all-time highs here. Small cap index, same thing, of course, ABC wave down, overdone at the bottom. Nice, strong bounce back, which is good to see in the small cap index because they do tend to lead the overall market. When people are willing to buy small cap indexes, they're willing to take risk. If they're willing to take risk, they're willing to put a lot more money in stocks than they are in bonds or gold or anything else. And so we like to see the Russell do well. Now, it's a little bit soft today. It's leading the way lower today, and we're getting a little bit of a pullback. But hey, after a really nice bounce back last week, we were due a little bit of give back. From a cycles perspective, this is kind of a new technique of mine in terms of trading. Last week's rally back put all the long-term, mid-term, and short-term cycles on a bullish mode. But if you scroll down to the hourly and 2-hour charts, you're going to see some cycles there now topping out because they're a bit overbought. So all that's to say that we are now in a new bullish uptrend after the pullback, but we probably will see a little bit of softness today, maybe into tomorrow. I think we'll close the rest of the week higher. We also get we had ISM manufacturing out today. We get ISM services out on Wednesday. There's a J-Pow speech tonight, but that's non-material because he can't talk about the market since or the economy since next week is their announcement. And what else? With PCE prices are coming out. All of that for September. We don't really have October numbers, and I'm not sure we're going to get October numbers. So there's still a little bit of uncertainty in the market. It'll probably keep us a little bit tight and choppy for a while. Now, here's my map going forward, and I'll do this on the S&P 500 since this is the one that has come back the furthest. Okay, so we're starting to build in a nice little pattern here. This is a bullish pattern. It is a continuation pattern, and when it shows up, this is the inverted head and shoulders pattern. When it shows up at the top of an uptrend, it is a continuation pattern. When it shows up at the bottom of a downtrend, it is a reversal pattern. This is a continuation. I think we're going to go a little bit higher between now and FOMC next week. My thesis, and I'm only saying this because I think while the Fed will go ahead and cut rates 25 basis points, what the market is really looking for is some promise ahead into the future of 2, 3, maybe 4 more cuts by the time we get out to this time next year. I don't think we're going to get that from Jay Powell, and I don't think we're going to get that from the other Fed governors. Now, here's a little bit of a wild card, and I think this would be uber bullish for the market if Trump steps in and intervenes in Jay Powell's retirement plan and replaces him with Hassett, who is super duper bullish and is ready to cut rates like there's no end to the cutting of rates. He'll probably go ahead and bring the Fed rate down within a year to like 1%. And that's just going to, everything is just going to skyrocket if that happens. But that hasn't happened yet, and there may not happen. And Trump has said he's got his Fed chair in mind. It's probably Hassett, but it may not happen anytime real soon. That's the thing, right? I think Jay Powell's already, if he retires at the normal rate, it's out till late next year, something like that. I'm a little bit off on that. So here's my plan. Here's my map for the rest of the month. Okay, get a little bit higher next few days into the December 10th Fed announcement. At that point, we get a sell the news event because I don't think the Fed is going to give us exactly what the market wants. It'll be good. It'll lean dovish, but it's not going to be super duper dovish. And there's going to be some caution. There's probably going to be some comments in the presser that usually upsets the market a bit. And so we get a few days of pullback, right? And I think the pullback might be a little bit painful. Not as painful it was back in here, but just a little bit painful, right? We see 2% or so come off the market, and we print that nice right shoulder, and then we get into the Santa rally that takes us off into the January effect rally, and I think we'll be okay. Halfway through January, we'll be up at all-time highs. Okay, that's my map. I'm totally not committed to it, but we're going to just trade it one day at a time, as we always do, and we let the market dictate its own direction. Okay. So that's all I wanted to say about the indexes. I went through my charts of interest list, which is a long list of stocks that show up on scans, mentions in Pro Trading Group, unusual option flow. I see the mention by some folks I follow on Twitter. I'm doing my own charting, and I can find some stocks. There are IBD stocks. There are, all kinds of stuff, right? Stocks that I'm interested in for the newsletter. They all show up here. And then from those, I take a list of greens, which are stocks that are either about to set up to go long or have already set up and gone to go long. And some of these I think we're already in. In fact, we are. So let me just go through some of these and show you what I'm looking for, what I'm looking at. All right, so here is BW. I don't exactly know what BW does. Babcock and Wilcox. Sounds like a accounting firm or something. This is a classic power gap. So big up on earnings on huge volume. Here's your opening earnings gap. That's your power gap. It's a power gap because it hasn't even filled in or hasn't come close to being filled in. It hasn't hardly even been tested. So typically, we get a big power gap and a continuation move, and then we get the pullback into the top of that gap, and then we get the rally back up. We haven't even come back to the top of the gap. What is the market saying in a situation like this? It's saying, hey, Babcock and Wilcox, whatever you guys do, you're no longer a $3.50 stock. Your valuation now, because of what you revealed during earnings, is 650. Right? It's huge. That's a huge jump. I mean, this is a low price stock, obviously, but that's a complete game changer for this company. And the fact that it came down, printed a few tails at the 21 rising SMA, is also a very good sign, very bullish setup. And here's your RTL, your resistance trend line, anything north of that, and it should really go strong up. So you can buy it now. I don't have any shares myself, but that's one that I might recommend to one of my rooms or in one of my letters. QBTS, all right, I don't really like this sector. This is the quantum computing sector, but this is one of the better ones. And I do think that these guys have been getting a little bit more some positive press. They got really hit hard, maybe too hard on the AI fear. And they're starting to build, all of them are building this nice little base down here after a long pullback and a steep pullback all the way down into the pink zone of the uptrending LRC. And if you were to go down to the hourly chart, you're going to see a nice little bullish inverted head and shoulders. Now, this is one that comes at the bottom of a downtrend. So this is not a continuation. This is a reversal pattern. And I kind of like this. I don't like it enough to actually buy it just yet, but I've got my eye on it. We'll see where it goes. EOSE, this is an energy, I guess a data center related energy play. What I like about this one, this is typical of what we're seeing a lot of these AI and data center plays. We're getting these expanding ranges, what you might call the megaphone pattern, or I'm not exactly sure where to put that trend line, but there it is. So the lows get lower, the highs get higher. When you see this pattern at the top of an uptrend, that can mean a couple of things. Sometimes it means that the uptrend has run out of steam and it's going to roll over, and then they're going to crack through that support line, and that's it. It's over with. But more often than not, it creates a wider base or a trading range, and you can buy the support lows and sell at the resistance highs. And I think that's what's going on here. And it coupled with this nicely formed rounded bottom. Remember, rounded bottoms are bullish. V bottoms tend to peter out a lot faster, but rounded bottoms, because they took so long to form, pulling in lots of new shares, they tend to be more bullish longer term. So I like that for all those reasons. This is a NEE, I think, a nuclear energy play. What I like about this one, I'm not sure it would be ready to go just yet, but this is a head and shoulders, inverted head and shoulders continuation pattern, because it's at the top and it's still in play below the neckline. So that's where I like to buy. I like to buy patterns inside the pattern. Some people say you should wait until it breaks out and then you buy just to confirm. But I've been trapped too many times in false breakouts. And yes, there are some ways to determine whether a likely breakout is likely to be a good one rather than a false one. But in the absence of that kind of analysis, I prefer just to get in at a level of support. Like this morning, came down and tested the 21 period moving average, bounced nicely off of that. This level right here, about 85, is a pretty good place to get in to reduce some of that risk. EMBJ, this was a new add to the IBD leaderboard last week, or maybe a couple of weeks ago. It was a little while ago. And it's got some very good fundamental growth. So this was a losing company for a long time. They make airplanes. They're out of Brazil. Then they brought on a new CEO right around the COVID time, a little bit after COVID, and they've been profitable ever since. So here's the tip I want to share with you just now concerning this particular stock. I learned about this from IBD, but IBD learned about it from a fund called the Invesco Discovery Fund. So think ARK Invest, Cathie Wood, disruptor companies, sometimes really new, that not everybody knows about. and they're not even profitable yet. So think Kathy Wood, but also think conservative. Kathy Wood, in my opinion, tends to be, just she just shoots fast and loose and doesn't really care that much about um, fundamental strength and balance sheets and cash flow and earnings per EBITDA and things like that. She tends to discard all of that and just goes for the story. She likes story stocks, and if the stock has a good story, she's in. This one is a lot more conservative, but these are stocks. This is a fund that only buys stocks that it sees are on the cutting edge of new forms of technology or on the cutting edge of in disrupting their industries and with a long growth arc ahead of them. And so these are new, sometimes new stocks, sometimes IPOs, or sometimes like the one I just was mentioning, a stock that has a new CEO, a new product line, and a new lease on life. So if you go over here maybe once a month or so and just see what companies they're holding, especially the ones at the top, whereas I saw it down here. There it is. Embraer is 1.5% of the total fund, and the biggest holding is 2.33%. So that's not bad. So that's my tip of the day. If you want to look at, develop a list of stocks that have good growth, they've got a good future ahead of them, and they've given the stamp of approval by this very good fund, Discovery Fund, then that's a good place to go. UUU is a nuclear play. Here's one of my favorite setups is the new all-time high and then a multi-wave move lower that prints a clearly defined RTL. I like to get in, and this is forming a nice rounded bottom. There's your rounded bottom, maybe even an inverted head and shoulders, but rounded bottom ahead of breakout above the RTL. This is TSM. So this is the biggest semiconductor play outside of NVIDIA. And this looks pretty good. Yeah, this looks pretty good. VRT, we're in this one in the live trading room, and this one has already broken its RTL. There's your RTL. We got in just a little bit before that break, and we've enjoyed a couple of nice days of moving higher on the breakout. WMB, we have calls of this one in the options room. This is an energy play. Nice looking cup and handle down here off the 200 period moving average. And we're looking for this one to get up to 65 to give our calls a chance to hit their target. We just bought Qualcomm in the live trading room using the leveraged fund, and some really good setups here. Here's my favorite trading setup, right? New all-time highs, and then a multi-touch pullback to develop an RTL clearly defined with the base building right underneath it. And this one is ready for breakout, right? You've got the MACD pinching. You've got the cycles just about where they should be. The smooth stochastics buy signal happened last week. It's all go for Qualcomm. We've got AMD calls in the live trading room, and I'm not exactly sure where to put the RTL, because we could put one right there, and if we put one there, then it's already in breakout mode. So yeah, that looks good. XOM, we've got shares of XOM in the live trading room. I'm really pretty bullish on the energy sector right now, and oil itself also. And this is banging up on that RTL. This is my favorite little setup. So if you see stocks that look like this, uptrending, they hit either new all-time highs or 52-week highs or maybe 6-month highs, and then they do this little wave pullback that sets the RTL and then builds a base underneath it. That's where I like to get in. NBIS, well, I don't know where the RTL is for this one. I guess it would be right there, and then it's already in breakout mode. BABA's a Chinese play, which has been down on its luck, but seems to be coming back. There's your nice soft pullback, quite an extended one. And yeah, looks like that's really ready to go. I almost got us into YINN, YINN, which is the 3X bullish fund for Chinese stocks in the live trading room. Might still do that. I'm going to talk about CORZ in just a minute. AMPX is a biotech. There aren't too many biotechs that are set up nicely here because they've all had such a good run, and they're starting to cool off now. But this is a good one that has a nice RTL setup. I don't know what, I need to come up with a name for that setup, but it's one of my favorites. Sharp, here's a inverted head and shoulders after a mini little pullback, and I don't think it's a buy just yet. We need to see a little more bullish pressure coming in, but keep an eye on this one. And then VSAT, here is your RTL. Maybe not quite building a base just yet, but keep an eye on this one. This gave us a really nice trade back in this area right here, back in August, and been anxious to get back on board this one, but I haven't for a while. All right. Now, last thing I want to talk about, and then I'll take chart requests. So over in the trading main room of the live trading room, if you're listening to me, you can start typing in some ticker symbols, and I will do my best to give you my read on those. But let's go back to CORZ. So here is CORZ. Here's your pullback, rounded bottom base, maybe forming a little bit of a cup and handle. That's not necessary to do that, but building a base underneath the RTL at the 21 out of the pink zone. Okay, so just that alone is not a bad thing. But then I went over to, I was talking to some guys in my pro trading group, and they mentioned this name, and they mentioned a very large bullish call spread that was being bought on this ticker, CORZ, for February. The current price is right now 1660, and the spread was 18 over 25 or 25 over 18. So they went long the 18 calls and they went short the 25 calls for February at the regular expiration, and they were buying these in the millions of dollars worth, I should say. And so then I discovered that, you know what, I was searching for that trade in DrStoxx, which is the software I use to follow option flow, and I couldn't find it. Couldn't find it anywhere. I saw it in the option tree in my investors, in my IB trading platform, but I couldn't find it here in Black Box Stocks. And then I realized that under the little filter here, there was a little detail here that I did not have toggled on. Add multi-leg. Well, a spread is a multi-leg, right? It's not just a single call or put play. And that's usually what I track. I don't really track spreads or condors or butterflies or anything like that. We sometimes trade those, don't usually trade those. But when I toggled this on and hit save, and then I searched for CORZ, there it was. So let's take a look at this trade, right? So we can ignore the 20 and the 15 strikes because those are separate trades. Somebody else is buying those. The guy that we're interested in here bought two big tranches of the 18 strike for February regular expiration when the stock price was right about where it is now. And he's paying about 215, 208 or so for those. 20,000 here, 5,000 here. And then on top of those, he sold short, because that's what you do with a spread. He sold short the 220s at the 25 strike to reduce his overall cost basis. He sold 2,500 of those. Now, I'm not sure if this is the same guy, but we have a guy buying 20,000 at the 18 strike, 20,000 more at the 18 strike. I think the spread is this guy right here, the 18 strike 5,000, and then half the number of calls on the top at 25. So I'm not going to do the math, but if you take what he paid for the calls, 1 million, and subtract what he got in credit for the short 25 strike, you'll get his overall cost basis for that trade. Now, what really strikes me here is not so much that he's doing a spread or that's out to February or that's all the way up to 18 and 25. It's more just the size, because you really don't see this kind of size on a ticker symbol like CORZ, which is, in my opinion, a bit more of a speculative name. Usually you get, $50,000, 75, 125, maybe 180, something like that. But 4 million, 1 million, 4.3 million, these are some big bets. So, and if you have a spread from 18 to 25, it's got to move all the way up to 25 if you want your full credit, right? If you want to take full profit. And if it's down at 16 and it's going to 25 by February, that's a pretty good move. So we understand that, anything can happen. This might be a buy on a rumor. This might be a guy managing a hedge fund with a gazillion billion in it, and this is a tiny little trade. But for whatever reason, somebody thinks CORZ is going up north of 18 and also all the way to 25, quite likely, in fairly short order, right? So only 2 months away. So there's your tip of the day. Keep track of the when you're looking at black box stocks, toggle on that multi-leg, and then see what shows up when you're screening for different for different trades. So you can see ML, ML, ML. Those are all the multi-legs. These are probably the same guy. I think all these in yellow are probably the same guy. And then you've got a couple of blocks in there that are somebody else. All right. And those are all bullish too. There's no puts. Right? There aren't any puts above 100,000 per trade in CORZ today. That's also a good sign. All right. So that's my little tip of the day. Let me get back over to charts, and we'll see what you guys are interested in. I'm looking at 1, 2, 3, 3 ticker symbols. All right. We don't have too many people. We don't have too many people in the room today, frankly. I think because the Thanksgiving break, everybody's still taking the day off. But I'll go ahead and look at these 3, and then I'll wrap it up and produce the video here and put a link in the room. All right, let me get rid of this. And let's take a look at IBM. All right, yeah, so IBM was really down on earnings, and then it rallied very nicely up. And I think there was some news driving that higher. You can see really good volume coming in. So it's a little disappointing that it was down on earnings, but we're seeing that a lot of these names, we saw it in Microsoft, we saw it in Facebook, we kind of saw it in NVIDIA, which went way up and then came way down. Any company that is increasing their CapEx expenditures on AI is getting a little bit of a, not so nice treatment by the market, because that's the concern. The concern is companies are spending too much money. They're going too far into debt. They're not going to be able to make it back. Possibly that will just totally destroy the economy. But hey, for right now, we don't need to worry about it. IBM rallied back quite nicely. It's been IBM is a stock that I actually had shares of when I was 17 years old, given to me on high school graduation by an uncle. And I held on to those shares for like a couple of years, sold them to buy a stereo. I bought like the toppest, highest end stereo you could buy. And if I had held on to those shares with all the splits and everything, I'd probably have about $100,000 in cash. So that was a very expensive stereo, maybe more than that, actually. So anyway, very nice looking chart, very strong. With a chart like this, however, you're wanting to buy the dips, not the rips, because you can see it's quite undulating, right? Just on a technical basis, you're starting to get a little bit of a weakness showing here in those highs, right? The lows are going up nicely, that's good, but the highs are not pressing higher to the same degree. So it's a rising wedge. These typically break to the downside, and when they do, it can really be a bearish event, right? A shorting event. So I wouldn't buy it up here. If I'm long, I would hold it. I would put my stop underneath the 21 or even the low. Let's zoom in a little bit here. The low of, what is that, Tuesday last week. I would put my stop right below that low, and I would just kind of trail it up underneath the 21 as long as I could. Yeah, it's down a little bit today, but so is everything, almost everything, especially tech-related names, down a bit today. And if you're long, if you bought it down here off the 50, congratulate yourself on the back, because that is really the best place. You want to get in on the dips to support, as long as you see a good bounce following on that, and which you did. You got that. So it's a hold. That's all I can really say about it. Your target is going to be up here at the top line, or I would say maybe even 320. So yeah, if you bought it down here around, let's say 295, and you ride it to 320, that's a good trade. That's a very good trade. Microsoft. Okay, so I actually have some Microsoft in the leveraged version, MSFU. I haven't called it yet in either room, been kind of waiting for Microsoft to confirm this hammer candle. That's where I bought it. We got a nice gap up and then follow through the next day. But I still think that there's a lot of overhead that this has to work through. The biggest mess is going to be getting up through 500. I'm not so sure it's going to do that on this move. It's already at 487. So, 487 to 500, 13-point move on a $500 stock. There are better trades out there. Take a look at CORZ, for example, or APLD. We're in that one, which is doing really well. But, it is one of the mags. It will certainly come back. If you buy shares now, I think 2 or 3 years down the road, you're going to be in a nice profitable position. So if you want to add shares to your long-term holdings, this is a pretty good place. You may not actually get much lower than 470, 480 for a long time in Microsoft. But I do think that as a swing trade, it's not in the best place. Now, you could even make a case that this is a short, right? Because way down, right? Here's your A wave, B wave, very weak, very soft into the 21, right back down again. And those down waves are very sharp. Now, again, another little bounce. And I think after next week, if Microsoft is not up above 500, assuming that we get a sell the news event, which I think we're going to get after the Fed, then Microsoft is probably a short at that point. Okay, sorry to give bad news on that one, but again, long term, sure, no problem. Buy some now because it's at a pretty good price. For a swing trade, it's not set up very well at all. Not on the long side. Okay, let's look at shiny. I've been kind of hesitating on gold. Not exactly sure why. I don't really have any technical reasons to be cautious on gold, but it did have, maybe I do have a couple of technical reasons. So all-time highs, right? And then a big slam down the next day that just kept going lower to the 50. Then a weak bounce, another slam down on a gap, rounded bottom, which is good, right? Build a little 5-bar base right in here. And then a rally higher on low volume, which isn't so good. And now a kind of gap and crap sort of day. We're in silver. And silver to me is where you want to be. It's just boom, 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 boom. And if you look at longer term, even a monthly chart, you're going to see this is way above, not way above, but it is above all-time highs that go way back a decade or more. So yeah, silver to me looks great. Gold, not so great. Now, all of that said, that, we can, it is technically it's above the little pivot high there, and it's probably going to get up to 400. But 390 to 400, not that exciting of a move. You could leverage that, of course, with shiny, which is 3x. You can use UGL, which is 2x. But I'm just going to wait on gold. It's not bearish by any means. It's not bearish. Don't if you're already long, I would hold. I would hold for sure. But make sure that you're moving up your stop underneath the recent lows. Okay, NBIS. NBIS has been on my greens list. I just looked at this one here, cracked above the RTL. It's having trouble getting above the 21, but considering the market today, this is looking very good. Volume is light, but it's been light on everything. Yeah, fresh MACD buy signal below the 0 line. That's very good. That's where you want to see it. A few days ago, got the smooth stochastic buy signal, and the except for the short-term cycle, everything else is rolling higher. That's what you want to see also. Yeah, this looks good. Maybe we should get long NBIS, but I would say you could buy it here. It's pretty, you'd put a stop somewhere underneath today's low, and your target would be 120. And that's a nice trade. 98 to 120. That's what I'm talking about. All right. So I like NBIS, and I think it's on my green. It is on my greens list already. Avgo. So yeah, this one topped out. It's coming back. That's a 3-bar reversal. You don't want to be long right now. I'm not exactly sure why. It was stronger than all the other chip plays for the last couple of weeks. NVIDIA has been trending down. Avgo's been going higher. AMD also strong. Qualcomm is starting to get strong again. NVIDIA to me is a little bit of a no-go zone for a little while. Let's get past FOMC first. I think it's got another leg lower, but I wouldn't want to be long AVGO right now. Hopefully you bought it down here, right? Where I'd like you to buy it on the break of the RTL, right? Nice soft pullback. You bought it somewhere in this area. You wrote it nicely up here. You raised your stop to protect your profits, and you got stopped out for a profit today. And if that's you, pat yourself on the back. If you're looking to buy it today, I wouldn't. I would not. No, give it some time. And it's got earnings coming up pretty soon too. So I bet everybody in social media knows that I am bearish on IBIT, and even more bearish today. This just looks ugly. How low can Bitcoin go? Well, 75,000 is a number that a guy in my pro trading group stated when he shorted Bitcoin back in early October, and it was up above, I don't know, 110 or 105, something like that then. He's calling for 7,500, and there's a guy, an Elliott Wave guy in my pro trading group who's calling for something like 15,000. All right, I don't think it's going to go to 15,000. I think the valuation there is not going to allow it, but it's just a total no-go zone, and we are now short Bitcoin, as I think we should be. There will be periods of maybe 2 to 3 weeks of good relief rallies. You're going to see these on like little mini capitulations. So you get a big sell-off for a couple of days, and then you get 2 to 3 weeks of maybe where Bitcoin goes up 15%, 18%. You can trade those for sure. But I personally would rather short the tops of those than try to buy the bottom of this escape train waterfall that nobody seems to be able to stop. You're getting big funds unwinding. You're getting a lot of folks who, a lot of Gen Z people who put their life savings into Bitcoin starting to get out now to rescue what is left. And it's just a no-go zone. Same for Ether. And maybe Ether isn't, maybe Ether is closer to its bottom than Bitcoin is, but I wouldn't be surprised to see both Ether and Bitcoin in downtrends all the way into March, April, or beyond, really. Just the way it's just the way the market is. It's just the way the structure is here. Now, I'm totally happy to be wrong about both of those trades, but for me to be wrong, you're going to have to see a close above that line right there. That is your RTL on the top of this pullback channel or this bear trend channel, and it is a bear market for sure. Until that breaks to the upside, I am going to stick to my bearish thesis, and I think you should too. Okay, I can't do all these. You only get one. Okay, so we're not going to look at HUT because that's a Bitcoin play, and MSTR is shortable. Yes, I hate to say it because we have a little nibble of MSTR in our wealth building portfolio, and I've been waiting for the Bitcoin, MSTR, Ether to bottom out, and then we can add one more and maybe see if we can get back to something closer to break even. I don't think we will, but just avoid MSTR as a long as you would avoid the plague. And you could short it, but I think frankly the big gains on the short side for MSTR and Bitcoin and Ether are probably done unless you hold them on, as I said, until March or April next year. Okay, CAT CMI rock. Well, we were in CAT in the options room. We had a very nice trade on it, and you don't really need CAT to go up too much because it's a higher price stock to make a nice buck on the calls. We were long calls. We bought them down here on this this AGA, which is a alpha gold alert through the options flow, and it was just up, and we took profits last week. On Wednesday, I think we took profits on Wednesday last week, left a little bit on the table, and now it's starting to roll over. But this is a very good chart. It's bullish. I think you can be bullish on the whole industrial sector, XLI, and take a look at the top 10 holdings of XLI, and any of those are probably very good places to be for the next few weeks. And if the market really does roll over, I think there's maybe a 30% chance of that happening into the first quarter of next year, maybe a little more than that. Industrials would be a good place to find your long positions, along with energy and some other stuff. I like CAT. CMI we looked at last week, and it was a really nice looking trade, and ROK, same thing. They're starting to double top a little bit, but I wouldn't be worried about too much of a pullback in any of those three. They're just too strong. Volume down here is too good, and any kind of a little pullback. And you know what you can do if you're out of these and you want to look for an entry, go over to the 1 hour chart and see if you can find some levels of support. This is 1 hour chart. There's not much going on there, but let's look at CAT. Okay, so CAT has this, here's a pivot high right here. It's a support resistance flip. It was resistance, and then it has become support, and that's exactly where we're at right now. So I think right now is not a bad time to buy back into CAT. We'll take a quick look at Devon Energy. And as I said before, I like the energy space. We've got XOM in the live trading room. We've got WMB in the live options room. And Devon is somewhere in the top 10 of the energy index holdings. Yeah, this looks good. Touchdown. So this looks really, really good, right? You've got good volume coming in. You've got the breakout move. It's a fresh breakout. I tend to like to trade pullbacks rather than breakouts, but this looks like the real deal. Yeah, the indicators are a little bit high. All right, so maybe it kind of cools off a little bit, does a little bit of a base, but as long as it stays above 37, and it's 37.87. If you can put maybe $1.20 stop on the current price and hold it for a while, I think you'll see probably into the low 40s maybe by the end of the year, maybe. All right, guys, I'm going to let you go. Let me record this, produce it, give the link into both rooms, and then we'll get back to trading. We've got over an hour. Yeah, so good. All right, God bless everybody. See you in a little bit. Bye for now.